You wake up, check the markets, and one number instantly makes your stomach tighten. Silver is down 32%, and this is not a normal market move. This is the biggest silver crash since 1980, and almost nobody was prepared for how fast it happened. One day, confidence was high, and the next day, fear took over everything. If you are holding silver, or even watching the economy closely, this moment matters, because crashes like this never happen in isolation. Welcome to Bullion Alert HQ, where we break down what the market is really telling you. Today's story is not just about silver falling, it's about why this fall feels different. Before we go deeper, take a second to like this video and subscribe to the channel. It helps you stay ahead of major market shifts instead of reacting after it's too late. Now here's what most people don't realize. Silver didn't slowly bleed lower, it dropped like the floor disappeared. This kind of move usually means big money already made a decision. And when big money moves first, the public always feels it last. In 1980, silver collapsed after extreme speculation pushed prices far beyond reality. Back then, the crash wiped out fortunes almost overnight. Today's crash is happening in a very different world, but the emotional pattern looks shockingly familiar. For months, investors were told silver was protection. Protection from inflation, from money printing, from uncertainty. But when protection fails, panic spreads faster than logic. And that panic is exactly what we are seeing now. What makes this crash more dangerous is how quiet it was at the start. There were no screaming headlines when the selling began. Large institutions reduced exposure silently. By the time social media noticed, the damage was already done. This is how market traps are built. Calm on the surface, chaos underneath. Retail investors often enter when the story sounds safest. And silver sounded very safe for a very long time. Industrial demand, green energy, limited supply, all of it made sense. But markets don't move on logic alone. They move on liquidity, fear, and timing. And right now, liquidity is tightening everywhere. Interest rates staying high changed the game. Suddenly, holding metals became less attractive compared to cash and bonds. At the same time, the dollar strengthened. And a strong dollar puts direct pressure on silver prices. These forces didn't arrive overnight. They built up quietly, then hit all at once. This is why the drop feels so violent. Multiple pressures collided at the same moment. What's even more worrying is investor psychology right now. Many are still in denial. They are telling themselves this is temporary. They are hoping for a fast rebound. But history shows crashes of this size rarely bounce immediately. Markets usually need time to absorb damage. There is often a relief rally, then another wave of selling. That second wave is where most people lose hope, and hope is what markets feed on. If you are still watching, you're doing the right thing. Understanding always beats reacting. At Bullion Alert HQ, our goal is not fear. Our goal is clarity. Because silver's crash may be signaling something bigger, something that goes beyond one metal. It may be warning us about economic stress building underneath the surface, stress that hasn't fully shown itself yet. In the next part, we're going to uncover the real trigger behind this collapse. Not rumors, not opinions, but the actual chain reaction. And we'll also talk about what history suggests could come next. The part no one wants to talk about. Stay with me because this story is just getting started. In the first part, we talked about what happened on the surface. Now it's time to look underneath, where the real reasons live. Because markets don't crash like this without pressure building quietly for months. Silver was already under stress long before the price collapsed. One major factor was interest rates staying higher for longer. When rates stay high, money looks for yield, not storage. Silver does not pay interest. So when investors can earn returns elsewhere, silver slowly loses its shine. At the same time, the US dollar started gaining strength again. A stronger dollar makes commodities priced in dollars more expensive globally. That alone creates selling pressure. But silver was hit by something even more dangerous than that. Futures markets became crowded. Too many traders were leaning on the same bullish idea. When everyone is on one side of a trade, it only takes a small push to cause chaos. That push finally arrived. Margin calls began quietly. Forced selling doesn't care about long-term beliefs. Once margin calls start, they feed on themselves. Selling creates lower prices, which triggers more selling. This is why the drop felt sudden and violent. It wasn't one decision, it was a chain reaction. Another overlooked factor is industrial demand slowing. Manufacturing data has been weakening across multiple sectors. Silver is not just a hedge, it's an industrial metal. When factories slow down, silver demand takes a hit. Solar and electronics demand is still there, but growth expectations were too optimistic. Markets had priced in a perfect future. When reality failed to match those expectations, prices adjusted brutally. Markets always punish overconfidence. At Bullion Alert HQ, we watch one thing closely during crashes. That is sentiment. Right now, sentiment around silver has flipped fast. Fear has replaced conviction. This is the most dangerous emotional phase for investors. Decisions are made emotionally, not strategically. Some investors are panic selling at losses. Others are frozen, hoping prices will magically recover. History shows both reactions usually lead to regret. The market does not reward emotional timing. Back in 1980, the crash didn't end hope immediately. There were rallies that convinced people the worst was over. Those rallies trapped many investors. Then came another leg down. That pattern is important right now, because silver may not be done moving yet. Short-term bounces are normal after sharp drops. They give relief, but not resolution. The real question is whether trust returns. Without trust, rallies stay weak. Another silent pressure is central bank behavior. Central banks are not rushing into silver. They are focused on currencies, bonds, and gold. Silver does not get the same institutional support. That makes silver more volatile. And volatility cuts both ways. Retail investors often underestimate how fast sentiment can shift. One week, silver is protection. The next week, it's a problem. This is how narratives die. Slowly at first, then all at once. If you're holding silver, this part is critical. Not because you should panic, but because you should think clearly. Crashes force decisions. Ignoring them is also a decision. At Bullion Alert HQ, we don't tell you what to buy or sell. We help you understand the environment you're operating in. And the environment right now is uncertain, emotional, and fragile. That combination creates opportunity and risk. In the next part, we're going to talk about what usually happens after crashes like this. Not guesses, but historical behavior. We'll also talk about what signs to watch next. Signs that could tell you whether silver stabilizes or sinks further. Stay with me, because part 3 is where the picture starts to come together. Now we come to the part that everyone wants to know. What happens next? History can guide us because silver crashes don't happen in a vacuum. After the 1980 crash, silver eventually stabilized, but it took years for confidence to return. Short-term panic gave way to long-term caution. One thing we notice after crashes like this is that volatility spikes. Prices swing dramatically, and traders get caught in emotional cycles. This is where opportunities appear, but only for those who stay rational. Panic selling creates moments where smart decisions pay off. Another pattern is the relief rally. After the initial drop, prices often bounce back just enough to trick investors into thinking the worst is over. Those rallies are dangerous traps. They create hope, which the market often punishes with a second leg down. At Bullion Alert HQ, we track these signals closely. Recognizing the cycle is more important than guessing the exact bottom. Institutional behavior also matters. Big players move slowly, quietly, and strategically. They wait until panic peaks, then start accumulating again. Meanwhile, retail sentiment often flips completely. Optimism disappears, and even longtime holders question their strategy. Industrial demand, currency strength, and global markets all continue to influence silver. Nothing exists in isolation. If you're thinking about your next move, patience is key. Emotional decisions usually lead to losses, not gains, but observation and planning can make this moment valuable. Crashes expose weaknesses, but they also reveal opportunities. One thing is clear. Silver is no longer the same as it was before this drop. Market psychology has shifted. Expect volatility to continue. Short-term traders will be shaken. Long-term investors will need courage. We also see parallels in other commodities. Often, when silver reacts this way, gold and platinum respond too. Diversification becomes essential. Relying on one metal or one strategy is risky in these conditions. At Bullion Alert HQ, we encourage viewers to focus on understanding, not guessing. Knowledge is your best hedge. Now is the time to watch, learn, and prepare. Reaction without understanding is dangerous, but preparation empowers. And here's where you come in. Comment below your thoughts on this crash. Did it surprise you, or did you see it coming? Share this video with anyone tracking precious metals. The more people understand, the smarter we all get as a community. Remember, markets are emotional. The swings, the fear, and the hope all happen to human behavior first, not prices. Stay focused, stay informed, and don't let panic make decisions for you. The crash is a story of pressure, psychology, and timing. Silver will stabilize eventually. The question is how you react in the meantime. We hope this breakdown from Bullion Alert HQ helps you see the bigger picture. Understanding comes before opportunity. Thank you for watching, and remember to like, subscribe, and turn on notifications. This way you won't miss crucial updates as the market evolves. And finally, keep sharing your thoughts, your strategies, and your questions in the comments. Every perspective helps everyone get smarter about silver and precious metals. Markets will test patience, fear, and discipline, but those who stay informed, rational, and strategic come out ahead. Silver crashed 32%, the biggest drop since 1980, but knowledge and timing can turn fear into advantage. Stay tuned, stay aware, and keep following Bullion Alert HQ for every update you need.